Hello everybody, welcome back, good morning. Let's have a look at some of these charts. Brief overview, to be honest with you. It's just a brief overview because there isn't much more to say. You know what I think. I think we're in the middle of a consolidation, not in the middle actually, I think we're at the beginning of a consolidation, but a consolidation all the same. It could only be shallow, it could go deep. It depends on what's going on in the world, I have to say. Now I've been thinking good and hard about what is going on in the world, and I actually don't think it's going to escalate too much further. That's just my belief. I was talking about it on the Telegram yesterday. And normally, if you just follow the money or incentive for money, or who is positioned to gain out of anything, then you can normally find some kind of answer. And I just don't see any reason for it to escalate. I know that sounds stupid, and it probably is quite naive, but I just don't. And so I'm not looking for anything to boil over on this one. I think it's just gonna be a little bit more tit for tat, but nothing more. I think we've seen the peak already. So with that, the markets are already behaving in the way that we'd expect, with or without those. But with that situation that occurred over the weekend, with the consolidations are basically starting now. How much pace it has on it, I couldn't tell you. But looking for the S&P, the first major area to pull back down to over the next couple of weeks, and it's only a little bit further from where we are right now, 4,972, with a view to maybe break down to 4,700. That's not massive, is it? It's not huge. It's really not massive. And that, again, is in the event that the consolidation actually does what it's supposed to do and just consolidates. It's only a almost 6% move. It's nothing. Nothing. The Dixie is one other thing that we've got to look at, and the Dixie is already broken out. We'll be looking for a retest of 105.3, and then a move up to new local high 107.8. Quite close to 107.9. Either way, this is an uptrend. Again, look at this on a weekly. So big move up, down, 200 exponential, up, 200 exponential, also basically a higher low. And so we're looking for a higher high. Now, some people I know are talking about breaking up all the way up to the top of this channel, this rising channel. I can't say that we're definitely going to do that. I'd be surprised if we did do that. To be honest, I would be pretty surprised if that's where we went. But nothing's impossible. I think we would see that if stuff happens abroad. If stuff doesn't happen abroad, I don't think we're going to be seeing that. But we could easily see this and maybe a little higher before we come back down to the bottom of the channel at some point between now and next year. But again, we're looking at it bit by bit, moment by moment, hour by hour, day by day. And today it does look like we want to come back down to retest some of these areas. So if that is the case, we might see a little bit of green today. Just a little bit. Don't get too excited. Just a little bit. Again, the tensions from what I can see, less tense, but markets will react. But we saw how they reacted over the weekend as a result of what actually happened. And it was bad, but it wasn't incredible. It wasn't enormous. So, and I think if that is the peak, then whatever happens next is, tame. I think the response on the chart will be tame. But because we are breaking down, it's the wrong word. If we are consolidating, all right. It's not a breakdown. Yeah, it's a change of formation, a break of formation. But I don't want people to think that this is the worst thing anyone's ever seen in their life, because it's not. We should be thinking about, what's the upside potential, what's the downside potential. It's kind of simple, really. Upside potential involves each one of these moving averages. The 10 exponential has been the main resistance point of recent since we lost the Bollinger Band itself. And so that gives you a resistance of 65,900. 21 exponential today is sitting at 66,800, and the Bollinger Band center itself is 67,800. Each one of these being a resistance area. Not to mention the horizontal at 65.4 and the 50 exponential at 64.6. So look, there's plenty of room to be rejected from on this daily, and each one of those is absolutely plausible, and I would expect each one. If we move away to the 4 hourly, 66,500 is a death cross now. So we've seen a death cross on exponentials, death cross up here at simples, and we'll be looking for a rejection on those if we come up to retest them. These would be areas to short from. Now, look, the halving's coming around the corner. We all know that. What are we going to do about that? Well, I don't know. It's a gamble, isn't it? That sort of event. I always stay clear of that. It's always a bit of a gamble. It could go up, it could go down. It's not for me to say. This time is slightly different. People are slightly different. The fact that we made a new all-time high is slightly different. But yeah, every time I've witnessed a halving, or at least gone back to look at it after it happened, it's caused a bit more downside actually after it happened, because it's one of those events that is a buy the rumor, sell the news. So I don't really have a strong opinion on it. Although my opinion generally is to stay away from the market just for a little bit longer and allow the consolidation to kick in. Now, recognise this, on the 4 hourly we do have some bullish divergence, just 2 drives of which, it's only 2 drives. So a third drive would be nice. A third drive normally has a decent reaction. We might revisit this wick down here at 60,000 basically, maybe dip down a little further. Whether we come up to see the death cross first before we do that, or we get rejected around here and come down for a new lower low, with another drive of bullish divergence that could then, at that point, give us a move up into the 66s, maybe the 67s, death cross retest, and back down again. You know, these are the setups, if anything, that I'll be looking to play. I'm not particularly interested in playing anything today. To be honest, I'm not really that interested in playing anything until after the halving. I want to get that done and dusted and out of the way, clear up the trading environment. Obviously, you all know I have a hell of a lot of hodl. That's fine. Hodl's a different strategy. I've been hodling some things for about 5 years now, to be honest with you. So that's a completely different strategy, and it's winning one as well. So you say, well, why don't you sell your hodl bags? You're talking to me about selling my Ethereum at 160 and my Bitcoin at 4,000. Not going to sell that, thank you. What, you want me to sell my Matic that I bought at 1.2 cents? No thanks, no. Well, your market's coming down, it doesn't matter. Am I going to get those entry points again? I doubt it very much. So those hodls stay as hodls. That's the strategy. Trading is very different. Trading, you want to, it's about timing the market rather than time in the market, which is what a hodl bag is. So they're two completely different strategies. And so really, I'm trying to time the market right now, and that's what trading really is about. And I do see some evidence for a move up either today or in the next move down to create maybe even a reversal. But right now, I don't really see it as decent risk to reward. Same thing will be going for pretty much everything. The XRP is having a nice try to get back above 50 cents. Maybe this is a video for that's a chart for another day. To be honest with you, that is a chart for another day. We won't talk about that right now. But so, long story short, Dixie looks like it wants to pull back a little bit today before making a new high. Bitcoin looks like it wants to maybe make its way up to that death cross and then down, or it could just go down again. Your guess is as good as mine at this point, really. There's evidence either way on the 4 hourly that it could go either way. I think the best thing is to follow the big boy, which is the Dixie, which does look like it wants to have a pullback down to these levels, 105.3, 105.4, and then from there move up. So think about that as the inverse move. So this is the inverse of everybody else. This is coming down, everybody should go up. This should bounce, everyone should go down. It's a very oversimplistic view on it, but we are sitting here at 8 o'clock in the morning, and there's a lot of price action to be seen. That is your overview, that is your summary for this morning, and we'll just have to monitor the situation abroad as it develops. Hopefully it calms down. Right, I'll leave it with you there, but thanks for watching. Hope you have a nice day, and take it easy. Don't forget to like and subscribe to the channel. I very much appreciate that. Yeah, thanks. Take it easy.